This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on April 24th, 2015. Our time is 8:46 Mountain. Our radio show runs on 630 CHED in Edmonton. If you ever miss a radio show, you can listen to the shows streaming. They're streaming live. HESradio.com, rarecoloreddiamonds.com. We have a podcast. The podcast is through iTunes. All you need to do is type in the World Financial Report on Radio. You will find us, and we go anywhere you do on your portable device. Connect with Harold. Get our free weekly newsletter, the companion to our radio show. The information you'll hear on today's show, you can be reading along with Harold and myself. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022. We send our free weekly newsletter out. You can go through it in 5 to 10 minutes on any device that you have, or you can spend hours if you want. This week in the news, Sotheby's magnificent jewel sale in New York City. There was a 100-carat white diamond. It sold for $22.1 million. Our featured diamond of the week from rarecoloreddiamonds.com is a 2.05 carat cushion cut fancy intense yellow internally flawless. If you would like to learn more about investing in this rare colored diamond, speak with Harold at rarecoloreddiamonds.com. Also this week, Greek banks, they were close to collapse. They received emergency cash to tide them over as Greece continues to negotiate a bailout. Greece, in fact, ordered a raid on all cash that belonged to them as they were dwindling in cash. The funds were getting down to almost nothing, and they basically said, give us all our money and put it in the main Bank of Greece treasury. In Spain, they have negative yields. Same with Australia. Spain and Australia joined Switzerland with negative bond yields, meaning you're paying them, they're not paying you if you invest in their bonds. Crazy, but true. In Switzerland, their pension scheme will be bankrupt in 10 years. A lot of it having to do with negative yields. If you don't get make some money on your money and you're paying it out, eventually you're going to go bankrupt. The oil price, we could be in for a shock in the future. Obviously, the oil price has been manipulated down by the Saudis. They're taking advantage of it, increasing their market share. But in the long term, we could see a major spike in the price due to the fact that a lot of projects have been put on the shelf due to the price being brought down. A trader was arrested in the 2010 flash crash. Finally, we're finding out what happened there. Here it is 5 years later. They arrest somebody. And Harold's son, Jonathan, sent us this story this week. McDonald's closing 700 stores around the world. Remember when McDonald's was adding a new store, it seemed daily? Well, not anymore. 700 stores around the world shut down. Also, Deutsche Bank to pay a $2.5 billion fine for manipulating the LIBOR, and almost one-third of those that have savings have less than $1,000 saved for retirement. Harold, it was a great week for diamonds with that magnificent jewel sale put on by Sotheby's, 100-carat white diamond selling for $22.1 million.
Certainly was, Randy. That was all the rage this week. Great news on that. I thought it would have sold for more, but it was not a Type 2A, which means that there was no nitrogen in it. Type 2A is just another level when it comes to those type of diamonds. The emerald cut D Flawless that we own is over 100 carats, but it's a Type 2A, and it's worth considerably more than the $22 million that 100-carat diamond sold for. However, the owners of the diamond, I do know who they are, were very happy with the return. They made an awful lot of money on it. So a lot of news in the diamond markets this week, very, very positive news, a lot of great action in the diamond business, and all in all, a lot of action in the commodity markets also this week. Gold, as we're taping the show, is substantially down this morning, down $16.40. We're at $11.78. Now, we've been saying that the gold market was going to drop, and we're convinced that it is due to the strength of the U.S. dollar. So we've been hovering around the $1,200 level for the last few weeks. We needed to see gold break 1180 and close 2 days in a row below 1180, and that will signal that the market's going lower over the short term. So as we're taping the show right now, we're down to 1178. Again, by the end of the day, it's possible gold could close above 1180, but there's no doubt in my mind that for the short term, gold is going lower. The only reason I'm saying that is I want you to be able to, for those that are looking to buy, and we're getting tons of calls from people waiting to know when they should buy gold. We're saying that it looks like gold is going to go lower before it goes higher, but that's not a negative for gold. Again, it's a technical situation that has to happen in order for us to reach the bottom of this market, where I believe we'll either be at 1,100 or at 1,000. Either way, we're very convinced that over the longer term, intermediate to longer term, that gold is going to go substantially higher. A lot of it has to do with what's happening in the currency markets at this point, and the currency markets are very, very volatile. So as we're taping the show here on Friday, gold is down 1640. It's been as low as 1175. Again, two closes below 1180 will signify the market's going to test the 1150 level. That'll probably happen next week. And again, we could certainly see this market fall lower if the U.S. dollar continues to strengthen. Silver market's down 17 cents at 1578, where it's spent most of the week above the $16 level. If gold does drop to 1,000, look for silver to drop to about 1350. Platinum market is below the gold market. It's actually trading at 1130, down $9 on the day. Platinum's really the only metal that's held in there, is trading at 775 at this particular point. Now, a lot of everything that's doing in the markets at this point is to do with what's happening with the U.S. dollar. It's not that the U.S. dollar is the strongest currency. It's that the U.S. dollar is stronger than several currencies, and is due to the fact that most countries have also reduced their interest rates to zero or close to it, and again, that's putting a lot of pressure on their currencies. There's a lot of currencies at this point that are not doing well, but the U.S. dollar has certainly strengthened, and that's why we've said that the gold market will go lower due to the fact that we are going to see lower prices in the currency markets. So at this particular point, there are a few currencies that are stronger than the U.S. dollar, those being the British pound, the euro, and the Swiss franc. Now, we've talked about the Swiss franc, especially over the last month or so, because what happened in Switzerland about a month and a half ago was a true example of how volatile these commodity markets can be, especially with what's happening in the currency markets that we know several banks over the last few years have been fined substantially in the billions of dollars for manipulating the currency markets. We're hoping that that also is going to happen with the metals markets. But again, the manipulation of the currency markets are real, and what we've seen is two extremes in the Swiss franc over the past month. Number one, the Swiss franc was supposed to be supported at the 120 level of the euro. And what happened is at the last minute, they didn't do that. They ended up not supporting the euro 120. Their currency increased by 30% in 1 hour, which was not a good thing, believe me. You would think that if you're in a certain currency and that currency goes up in value, that you've made a lot of money, but it's terrible for their overall economy. And we're starting to see signs of that. We know that the watch and diamond show in Basel last month did horrible due to the fact that their currency had increased by 30%. All it meant was everything produced in Switzerland was 30% higher, and people just didn't buy it because it wasn't worth the value. Just because your currency goes up doesn't mean that there's additional value in the thing that you're actually purchasing. What we saw this week, or also just getting back to the Swiss franc, is that they also are charging 0.75% for keeping your money in the bank, and that was a major faux pas because people are taking their money out of the banks at this point. Who in the world is going to pay to keep your money in the bank? And as Randy just brought up before, soon on mortgages, you're going to find that the bank's going to have to pay you. So a lot of things are going on at this point here that are detrimental to the overall markets and are really going to wreak havoc on the markets moving forward. What happened this week is that we saw an almost opposite situation to the Swiss franc. The Swiss franc plummeted against the euro this week, but the euro is still extremely weak. It's sitting at 107, and the U.S. dollar at this particular point is sitting primarily just below par. So we're sitting right now that the U.S. dollar is sitting at 97.18, down 12 points on the day. We've had 3 or 4 times in the last month that the U.S. dollar has tried to break above par. There's major resistance for the U.S. dollar to get above par. Now, once it does break it, and I'm pretty positive that it will, and probably within the very near future, there are buy orders above the par level in the U.S. dollar will send the U.S. dollar up probably about 2, 3, 4 cents above par. That means it'll be worth actually more than the euro is worth, and it will really start to catch ground with the strongest of all currencies, which is the British pound. As the U.S. dollar continues to get stronger and stronger, that's why I'm warning you at this particular point, over the short term, we will see the gold market follow what is happening in the U.S. dollar. The stronger the U.S. dollar, the weaker the gold market. The stronger or the weaker the oil market, the weaker the Canadian dollar. There's certain relationships between currencies and commodities that will benefit or hurt that particular economy. Also, in the United States, the strength of the U.S. dollar, you may think is a good thing. It isn't a good thing. If you're exporting anything out of the United States, or if you're an American company doing business in a foreign country, you're losing at this particular point. Anything that's manufactured in the United States at this point and exported to another country is not doing overly well because the U.S. dollar is extremely strong. So we're going to see some situations happening within the very near future that are going to rock the marketplace. There's a lot of very top analysts out there right now that believe the one thing that is destined to happen this year is that the Dow Jones is going to start its plummet. They're thinking it could go down not only below 8,500, but some are saying it could go to 5,000 to 6,000. We're in that camp. We believe that everything that is happening in the United States right now is smoke and mirrors. We believe that what's happening in the U.S. right now is not real. The Dow Jones at 18,000 is not representative of what the overall marketplace is and the economy is in the United States. It's just total manipulation. And the fact is they will not be able to manipulate these markets much longer. And just like 2007 and 2008, when the markets did fall, there will be hundreds of trillions of dollars within the marketplace that will disappear. Now, one other thing that we should definitely pay attention to, when these crashes happen in the Dow Jones, it's not that the hedge funds or anybody in the market knows that the market is going to plummet and they've taken a massive short position in the market. What the belief is that there is a group that orchestrates these situations. It's called the Bilderberg Group, and it's made up of the wealthiest families in the world. And basically in 2008 and 9, when the Dow dropped from 14,000 to 6,500, fell in by 50%, there was a tremendous amount of money that was lost. That money went into somebody's hands. And I believe it's this group, the Bilderberg Group, that are the wealthiest families like the Rothschilds and those type of people that really control the world's wealth. So there's a lot of conspiracy theorists out there that believe that this is true too. When a market like the stock market falls as much as it did, for every winner there's a loser, for every buyer there's a seller. When a market drops to the extent that it did back in 2008, somebody had to make that money, and it was not the investors and it was not the hedge funds, it was somebody that made these trillions of dollars, or a group that orchestrated these drops. So if you notice, back in 2008, the Dow dropped from 14,000 to 6,500. It took all this time to get back up to the higher levels again, and most of it was done, again, by manipulation. That means that the market is not where it's supposed to be. The market was made to go there because it was manipulated to go there. When the market starts to trade on its own volition, and it starts to look at the true economy and everything that's happening that supposedly made the Dow go to 18,000, when that market crashes again, it'll be very similar, possibly worse than the one that we saw in 2008. And the reason that I'm saying that is because of the derivatives market. We got a taste of it back in 2008 when Lehman went under and the market plummeted from 14,000 to 6,500. Now we've got other situations, and the derivatives market is in the quadrillions of dollars. It's unregulated, and when that does fall, it could wreak havoc on the stock markets and other markets around the world. One of the reasons that we believe here that we're not going to see a rise in interest rates is because it will affect the derivatives market in a negative way, and it could start this freight train rolling that nobody's going to be able to stop. So again, where we do see downside in the metals markets over the short term, over the longer term, intermediate to longer term, we not only see the gold market going to 2,000, but we see the gold market going to 3,000, 4,000, and 5,000. So a lot is going to happen within this year and then going into next year. And if you're not prepared for it, you're going to be shocked as to what is going to be happening in this market. We do not want to see the listeners to our radio shows, our friends, our clients, our fellow Canadians that listen to this show. We do not want to see you get trapped in this next upcoming debacle. What we need to do at this particular point is be conservative, get out of these risky investments that could take all of your money away. And where I'm saying that gold is going to go lower, it's going to give us a great opportunity over the intermediate term to buy gold at between $1,000 and $1,100. And at that particular point, and we're very close to bringing that to you, where you'll be able to buy gold physically through us at spot prices with no commissions. All we want is for our clients to get through these difficult times and end up making a lot of money. I believe the major buyers of gold are going to be countries like India and China, and I still believe that China will eventually have the reserve currency, and I do believe China is doing this and buying all the gold they can because they are going to back the yuan with gold. So that's what I see happening in the markets, Randy, at this particular point.
Connect with Harold at rarecoloreddiamonds.com. Learn about investing in hard assets, diamonds, gold, and silver. The investments that have stood the test of time. rarecoloreddiamonds.com, 1-800-432-1022. Our featured diamond of the week is a 2.05 carat cushion cut, fancy, intense, yellow, internally flawless. Go to rarecoloreddiamonds.com, featured diamond of the week. You can see video of that diamond. What a great diamond to invest in for the first time to start your portfolio. One of the more interesting stories on the gold front this week, Russian central bank gold buying came back with a vengeance. Russia announced a 1 million ounce increase in its gold reserves in March, so it's back on the gold buying trail in a major way. Also, and this is something that we've talked about in the show in the past, we really believe that the Chinese have a lot more gold than they admit to. And that may actually be coming to an end. The mystery of China's gold stash may soon be solved. The IMF is looking for answers. China's push to challenge U.S. dominance in global trade and finance may involve gold, a lot of gold. While the metal is no longer used to back paper money, it remains a big chunk of central bank reserves in the United States and Europe. China became the world's second largest economy in 2010 and has stepped up efforts to make the yuan a viable competitor to the dollar. That led to speculation the government has stockpiled gold as part of a plan to diversify $3.7 trillion in foreign exchange reserves. The People's Bank of China may have tripled holdings of bullion since it last updated them in April 2009 to 3,510 metric tons, according to Bloomberg, based on trade data. A stockpile that big would be second only to 8,135.5 tons in the United States. If you want to set yourself up as a reserve currency, you may want to have assets on your balance sheet other than other fiat currencies, according to Bart Melick, head of commodity tradings at TD Security. Gold is certainly viewed as a viable store of value for an up-and-coming global power. China may be preparing to update its disclosed holdings because policymakers are pressing to add the yuan to an International Monetary Fund currency basket known as the special drawing rights, which would include the dollar, the euro, the yen, and British pound. The tally may come before the IMF's meetings on the SDR next month or in October, according to Nomura Holdings in a special report. And there is word that maybe the SDR at some point would include gold. But it's interesting to note that in Russia, the Russian government adding 1 million ounces, and China holding a lot more gold than ever was suspected. We have about 3 minutes left in our segment, Harold, and one of the things that we put in our free weekly newsletter, and I really want people to get our newsletter this week because it's a must-read. Connect with Harold at rarecoloreddiamonds.com or rarecoloreddiamonds.com or 1-800-432-1022 there's a living expenses chart and a cost of living in the United States from 1975 to 2015. Now, granted, these are U.S. numbers, but they still tell a very scary tale. The reason we want to be in hard assets is to maintain our purchasing power. As we've heard in the past from Rick Rule, you want to invest in things governments can't print. They can't print gold, they can't print diamonds, they can't print silver. And we are losing our money every day due to government printing and inflation. To give you an idea, a barrel of oil in January of 2000 was $24. In March of 2014, it was $100. That's a 314% increase. Fuel oil, $1.19, and in March 2014, $4.07, an increase of 242%. Gallon of gas, $1.27 in Jan 2000, $3.51 in 2014 of March. That's a 176% increase. You get to a dozen eggs, almost $1. They moved to $2, an increase of 106%. Ground beef, $1.90 to $3.73. That's a 96% increase. A movie ticket, it went from $5.25 to $10.25, a 95% increase. Harold, we can go down the list, and it's pretty much the same story, whether it be electricity or cars or coffee or nat gas, postage stamp. This is the reason we're investing in hard assets. And Harold, with about a minute left, we advocate hard assets because governments can't print gold, silver, and diamonds.
You're 100% right, and all of those figures that you gave are all inflationary in a deflationary time, supposedly. So, again, one of the reasons that we recommend hard assets like gold and diamonds is because of the upcoming inflation. Right now, we may be in a deflationary market, so they say. However, that will change very quickly. But there's no doubt that with cheap money the way it is, we have to see inflation going forward, which is one of the reasons that we feel that the next phase for gold that will take us to 2000 after that, when inflation kicks in, you could be looking at $3,000 to $5,000 gold.
Well, let's be honest. From 2000 to 2014, who got a 100% raise? I don't know of many people. And yet, inflation, 100%. And that's the same for your investments. Did you have a 100% rate of return? More than likely not. But that's why we advocate having assets that have stood the test of time, gold, silver, and diamonds. Speak with Harold about investing in hard assets at rarecoloreddiamonds.com, 1-800-432-1022. Going to come back and talk about diamonds. As the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on April 24th, 2015. Our time is 9/11 Mountain. If you ever miss a radio show, the show is archived and streaming live for you on Harold's two sites, HESradio.com and rarecoloreddiamonds.com. You can listen anytime you want. Our show runs on 6:30 CHED, Sunday afternoon at 3. And don't forget, we have a podcast, too. If you have a portable device, iPad, iPhone, iPod, or obviously there are other devices out there, too. I know that Samsung and Microsoft has the Surface. If you have a portable device, just have iTunes on your portable device and type in The World Financial Report on Radio. We have a podcast. And our show, if you subscribe to it, will come in every week, or you can just go there and Listen, we are portable. We go anywhere you do. Connect with Harold at rarecolorediamonds.com, 1-800-432-1022, rarecolorediamonds.com, 1-800-432-1022, our featured diamond of the week. And this is a beauty. I was saying to Harold off air, this is a big, colorful, chunky diamond. And if you were looking to start a portfolio, this would be a beauty, a bedrock cornerstone. It's a 2.05 carat cushion cut, fancy, intense, yellow, internally flawless. Go to rarecolorediamonds.com right now, click on Featured Diamond of the Week, and you can see video of that diamond. In the news this week, flawless 100-carat diamond sells for a staggering $22.1 million in New York City in just 3 minutes. It was sold by an anonymous seller, and it was purchased by an anonymous buyer, which doesn't surprise me. You know, if you buy something like that, I think you might want to keep it private. And it was interesting to note, Harold, Sotheby's said that from 1990 to 2013, the price per carat for a 100-carat perfect diamond has risen from $125,000 to $260,000 per carat. And that is an absolutely stunning diamond, and we have in our newsletter pictures of it when it was a rough and then when it was cut. Just stunning. Now, I want to get to a few auction results and get Harold's thoughts on them. There was lot 142 from Sotheby's magnificent jewel sale, the same sale that this 100-carat diamond went at. It was a platinum, fancy gray diamond and diamond ring. And the carat on it was 10.17. It's a natural color, SI1 clarity. The estimate on it was 80 to 120. It went for $454,000. And Harold, it's interesting because lately we have been featuring as featured diamonds, gray blues, and grays. And they have become very popular, as is the case with at auctions as well, like Sotheby's. Here you have something going from the estimate on it 80 to 20, selling for $454, an amazing number.
It certainly is. I was extremely proud of so a lot of my clients that own those type of diamonds. Now, when I say a lot, a handful, because to get a gray diamond today, a pure gray diamond, is nearly impossible. We featured, and a few of our clients were very, very fortunate to have been able to get the blue-gray argyles. We are very fortunate to get these exotic argyles that were blue-grays, and now you can see how valuable these diamonds are. So here's a diamond that's a pure gray diamond, not an argyle, that was supposed to sell for 80 to 120. So let's say for $100,000 on average, it sold for 4.5 times that amount. That will tell you how rare these diamonds are and the returns that you can see from them. You know, the big diamond that sold, the $22 million 100-carat emerald cut, if you look at the newsletter this week, you're going to just love it because, first of all, the opportunity to see a diamond like this, it never happens. I mean, this is one of the world's great treasures. But it was cut from a over 200-carat rough and cut into just over 100-carat diamond. So when the cutter gets the rough, he just doesn't go and set out to cut it. It could take months and months and months, sometimes years, in order to cut that diamond. It's so valuable. And basically, the owner of this particular diamond did extremely well because he bought the rough at a decent price, and they were able to cut and polish this diamond into a magnificent emerald cut. So it's a flawless, over 100-carat emerald cut, which is the second rarest cut in these type of diamonds, with the rounds being the rarest. This is like a step cut. It's a long emerald cut that is extremely difficult to cut, and obviously to get one that's D-color, which is colorless and flawless, makes this diamond worth, you know, the $22 million or more that it paid for it. Now, I had mentioned on the last couple shows, knowing that this particular diamond was coming up, that we are part owners of a diamond similar to this, but our diamond is like this diamond on steroids. It's called a type 2A, which means that it has no nitrogen, and it means that not only is it clear in color because it's a D color, but it's totally colorless. You could see directly through the diamond. It's a phenomenon. Our diamond is worth upwards of 35 to 40 million, and this particular diamond sold for 22 million. Still a staggering price, but again, there's a level above this diamond, and that is the diamond that we are partners in at this particular point. Also partners in a 40-carat fancy pink diamond that we cut from an over 100-carat rough. So again, what's happening in the diamond business right now is almost unprecedented. So you've got the fancy gray diamond that was supposed to sell for about 100,000, sold for 454,000. Then there was an unmounted fancy yellow 10-carat diamond, not flawless, but still a nice. It's a VS2. They thought it would sell for 125,000. It sold for 237,000. There was a fancy vivid yellow orange. We have a few of those. Very, very difficult to get, but we do have a few. This one's a 3.53 carat. In a beautiful ring setting. It's a VS2 clarity. They thought it would sell for 100,000. It sold for 200,000. Double what they thought it would sell for. There was a fancy intense yellow diamond ring in a Tiffany setting. It's 5 carats, VS2 clarity. Thought it would sell for 60 to 80. It sold for 106,000. There was a fancy vivid yellow diamond ring in a Bulgari setting. It weighs only 2 carats. VVS2 clarity is supposed to sell for about 40,000. Sold for 60,000. Then there was our Argyle diamond necklace that could never, ever be replaced. A client of ours from California, a new client of ours from California, came down to visit us in our Worth Avenue private showroom, and he looked at this particular piece along with a couple others, and actually one of our vivid pink Argyle diamond rings, and purchased both of those. But we could never replace the Argyle diamond necklace for what he paid for it. In fact, for no amount of money could we replace that. Not even for 2 or 3 or 4 million could we replace that necklace. So here it is again that you get these type of pieces that are rare today, but give it 10 years from now, you'll find that these diamonds have taken on a life of their own. And if you want to see the type of returns that I just illustrated in the auction that just happened at Sotheby's this week, you need to start to buy diamonds now. You need to put them away for the long term. 4 or 5 years is nothing in the diamond business. You want to hold on to a diamond for 10, 15, 20 years. And if you don't need the money, pass it on to your kids and grandkids and let them make the money. My wife's girlfriend, grandmother, 50 years ago bought a 5-carat pink diamond ring for $50,000. Today that diamond's worth $5 million. Would you like that in your portfolio? You buy a diamond ring today, an Argyle half-a-carat vivid pink diamond ring for, let's say, a couple $100,000. That diamond in 10 years from now could be worth 10 times that amount. It's happened many times. Back in 2003, at the Argyle tender, I purchased a 2-carat fancy, vivid, purplish pink Argyle tender diamond for, at that point, was a lot of money, $350,000. Today, that diamond, 12 years later, is worth upwards of $3.5 million. That's the type of returns that you can see in the diamond market. On top of that, they could be sold in other currencies. So no matter what the currency markets are doing, we could sell currencies in other parts of the world. We have 8 Seagull Fine auctions. We could hold an auction in London, in Europe, in Japan, in China, in Canada, in Australia, anywhere in the world, and we plan on doing that. At this particular point, most of our clients are buying diamonds. Very few clients are selling. So the fact is we haven't had an auction within the last few months based on the fact that very few of our clients are looking to sell diamonds at this point, and plus there's an issue with the Canadian currency. The Canadian currency has dropped substantially. What that means for our Canadian clients is that any diamonds that you have purchased from us within the last year to 2 years have increased 25% just on the currency alone. Let alone what the diamond has gone up, the currency alone has increased by 25%, making the diamonds that you purchased about a year ago 25% higher. Now, we anticipate that the currency markets, and one of the major reasons that we recommended the diamond market to you was because of what's happening right now. When these currencies start to get volatile, you want to be in the diamond market. It's a market that's portable, transferable wealth. Nobody knows that you own it. It could be sold in other currencies, and it is not like a commodity that could only be sold in one currency. It's extremely important to own these type of assets at this particular time because of all the things that we're seeing at this time. When the stock markets plummet and the derivatives markets go crazy on the marketplace, you're going to understand how important it is to hold on to an asset that does not get affected by the volatility in those markets. It's a good, solid investment, but it's a long-term investment. Don't look to buy a diamond today and sell it in 3-4 years. You're just not going to make the money you should be making on it. You want to hold on to it for a longer period of time. It's like holding on to your RRSP for 10 or 20 years. The longer you hold it, the more it goes up in value. Again, a lot of our clients depend on selling the diamonds 10, 15 years from now and putting that towards retirement. And that's what we anticipate our clients doing. But at this particular point, it's a time to start to collect them. It's a time to get them into your portfolio. We've got numerous situations right now that could explode the diamond market, one of them being in the currency markets, the other being with the Argyle mine. The Argyle mine produces 95% of the world's pinks. It's going to close within 4 to 5 years, and we anticipate the price of pink diamonds from the Argyle mine will increase by anywhere from 2, 3, 4, 500% or more. On the stronger saturated colors like the vivids, some of them can go up 1,000%, just like we've seen on other diamonds over periods of time. So again, with all the risk in the marketplace today, with all the volatility and everything happening, and now we're starting to see the returns on these massive diamonds that are going to auctions, we want you involved in that. That's why we brought this market to you. I own a lot of diamonds. I own a tremendous collection that I put away for myself and for my family. And again, depending on your financial situation, this is something that you should be considering also. If you'd like to speak to me personally and privately about your investments and about the diamond market, the gold market, any of our other investments, I'll definitely do that over the phone with you and spend as much time as you need so you understand the benefits of owning these type of assets in the riskiest marketplace that we've had probably in most people's lifetime. So again, Randy, the results speak for themselves. Diamonds are doing amazing. They will continue to do so. And the worse the economy gets and the worse the currency markets get, the better this diamond investment becomes.
Get our free weekly newsletter. As Harold mentioned, you can see living expenses from Jan 2000 to March 2014. And sure, they are U.S. prices, but very similar to what's happening here in Canada. And this is why you want to be in assets that maintain their value and obviously are going to keep up with inflation. We believe that the place to be is diamonds, gold, and silver. Our featured diamond of the week, and it is an absolutely stunning diamond from rarecoloreddiamonds.com. It's a big, chunky yellow diamond. In fact, it's a 2.05 carat cushion cut, fancy, intense, yellow, internally flawless. If you'd like to learn more, you can see more at rarecoloreddiamonds.com. Click on Featured Diamond of the Week. We have the video of that diamond there. Also in our free weekly newsletter, something that's quite interesting beyond that 100 carat diamond selling for $22.1 million. There's an $18 million watch that's covered in diamonds. You have to check it out. Get our free weekly newsletter, rarecoloreddiamonds.com, or call 1-800-432-1022, 1-800-432-1022. There was something interesting that happened this week. The Drudge Report had this story, and I was somewhat skeptical about it. But then Ed Steer, who writes a daily column for Casey Research, lives in Edmonton, is a member of the GATA Board of Directors, Gold Antitrust Action Committee, and they obviously advocate gold and are fighting against the manipulation of gold. He said he had a letter from TD Bank, and JP Morgan Chase banned storage of cash in its safety deposit box. Some JP Morgan Chase customers are receiving letters informing them that the bank will no longer allow cash to be stored in safety deposit boxes only collectible coins and money, collectible money. And Ed Steer said that he got a similar letter here in Edmonton from TD, and he's verifying here in Canada that there seems to be a trend, Harold. Banks being told, people being told, you can't hold cash in safety deposit boxes. And obviously, we advocate having hard assets, gold, silver, and diamonds. So if you have cash and you're looking for a place to store that wealth, we actually have some ideas for you on the diamond front, right, Harold?
You certainly do, Randy. And again, how frightening is that to think that that is what's happening? So now, I mean, just looking at the way that things are going, you've got, again, banks in Europe that are charging you to keep your money in the bank. Now they're saying here in the United States, and by the way, that's definitely coming to Canada and the United States. There's no way that that's not going to happen. All the banks work off of the same model type of thing. So there's no doubt that this is coming to the United States and Canada also. But then on top of that, if you can't keep cash in your safety deposit box, what's next? I mean, it's an unbelievable, and that's, again, the other reason why we've been saying diamonds are so easy to store, and you don't need to keep them in a safety deposit box. There's other places that you can keep them because they're portable private wealth. You could literally walk around with $1 million diamond in your pocket and nobody would have a clue. In fact, you could walk around with a $10 million blue diamond in your pocket, which is about the size of your thumbnail. It was a vivid blue, a $10 million diamond, again, that nobody would know that you have. So, again, with the way that the world is heading, with what they're doing to the currency markets and with our money and how bad a shape the banks are in, all you have to do is look. You know, the Dow back in 2008 and 9 dropped all the way down from 14,000 to 6,500. You had, obviously, a lot of the markets fell, but what you're talking is that, you know, the banks never recovered. Just look at, so many stocks have gone up, but the bank stocks have not recovered. The Bank of America back then had dropped all the way down to $5. It's at $15 now. It's not that the banks have done well. So the banks are in big, big trouble and will continue to do so, along with the fact that the banks are charging very little interest. Interest rates are down to, you know, below 2% or 1%. So the banks are making no money. They're going to get into worse and worse trouble. And again, that's going to affect us in a huge way. You need to own assets that are outside of the banking system and outside of the paper market system, and that's the diamond market and the gold market. It's never ever been more important than it is right now to own diamonds and gold because of the fact that we're talking about. So now, if the banks are saying that you cannot keep cash in your safety deposit, how do they know what's in your safety deposit box? It's a frightening situation to think that this is what's going on. And let's not forget what happened in Cyprus a couple years ago when they stole all the money out of the bank accounts. So, again, we urge you to look at these alternative asset markets. There's a reason that they're there, and there's a reason that we brought them to you. And the reason is that the whole financial system is falling apart, and you need to have some protection against this, and that's really diamonds and physical gold.
Speak with Harold about investing in rare colored diamonds. RareColoredDiamonds.com, 1-800-432-1022, 1-800-432-1022, and ask about our featured diamond of the week. You can go to RareColoredDiamonds.com and see our featured diamond under the featured diamond of the week. It's a 2.05 carat cushion cut, fancy intense, yellow, internally flawless. And one other note, we had this last week, and I think it's important for those that might have missed it. Richard Russell was quoted as saying, speaking of panic, the auction prices for outstanding art and jewelry are up and off the charts. I just reviewed prices from Christie's and Sotheby's, and items selling for over $100 million are not uncommon. Big money is paying close to this much for portable tangibles. Along with auction prices, amounts paid for select New York real estate are almost incomprehensible. I ask myself why billionaires are willing to pay seemingly insane prices for outstanding tangibles such as Picassos, classic cars, real estate, diamonds, and jewelry. they are preparing for the collapse of currencies and the days when rare tangible items will be a form of money. That according to Richard Russell. And he goes on to add, the central banks of the world are pumping liquidity into the global economic system in an effort to thwart the current forces of deleveraging and deflation. The big money, the smart money, sees the picture, and they have been moving into tangible items, which tend to hold their purchasing power in the face of a dollar correction and possible eventual dollar collapse. Thus, the auction dollar prices for great art, top quality jewelry, diamonds, and classic cars have exploded. That was from Richard Russell. That was in our newsletter last week. I know a lot of people are feeling that the trade in the U.S. dollar is really one-sided. Everyone believes it's going up. But there are those that are quite concerned that we could see a trend down and trend down hard, Harold. And it's one of those things people have to be aware of. It's just not a one-way street on the U.S. dollar, and we still advocate hard assets in a time where the U.S. dollar may be strong, but let's face it, one of the businesses that came out this week and said they were being affected by the strong dollar was Harley-Davidson. They obviously now are in a position where other countries have currencies that are lower than the U.S. dollar. They're selling into the U.S. market. Harley-Davidson is taking a hit as a result, and they're feeling the pinch. There are a lot of other businesses in the United States feeling the pinch of the strong dollar as well. So it's something we're going to have to watch out for, that, you know, there are people who believe we could see the U.S. dollar go down strong at some point. It's just a matter of the timing. But, Harold, now is a time for hard assets.
You bet. Now, the thing about the U.S. dollar is not going to drop anytime soon because all the other countries are lowering their interest rates to zero, basically. So the fact is that the U.S. dollar is going to remain strong for the foreseeable near future. However, we've seen gold rally to the highest levels that it ever hit in 1980 due to a strong dollar. They were raising interest rates to fight inflation at that point. And if you remember, in 1980-82, in that area, they had raised interest rates so much it went to 22%. So gold does not only react to a weaker dollar like it's doing right now, but it falls on a weaker dollar. Don't forget, when we started recommending gold back in 1999-2000, nobody was even looking at the gold market, but the U.S. dollar was the strongest currency, and the gold market was at $250. It's only when in 2011, when the U.S. dollar dropped all the way down to 72.5 cents, that gold hit 1900. So there is that direct correlation. However, it's not engraved in stone. There have been times when the U.S. dollar has been very strong that gold has also rallied, and 1980 was one of those times.
Speak with Harold about investing in hard assets. RareColoredDiamonds.com, 1-800-432-1022. Ask about our featured diamond of the week. 2.05 carat cushion cut, fancy intense, yellow, internally flawless. We have about a minute left here in Spain, Australia, Switzerland with negative bond yields. People investing in Swiss bonds with a negative yield for 10 years. In fact, those that are holding Eurobor loans, mortgages, the bank, if you can believe it, is paying not interest, but paying off their principal because the loans have gone negative. It's just a very, very strange time. And Harold, with about a minute left, that's why we advocate investing in gold, silver, and diamonds, because we are just literally in unprecedented times. Here you have mortgage holders paying mortgagees, and you have somebody paying for a 10-year bond with a negative yield. It's just absolutely insane.
Let's not leave out the fact that you're paying to keep your money in the bank that isn't even safe. So, again, you know, with everything that happened in 2008 and 2009, they really had to do a lot of work to try to get the economy to stabilize, and they did a good job with that. But now we're going to start to pay the piper because of all the things that they had to do in order to make this happen. And again, cheap money and the tremendous debt that's going on at this point is what's going to be the downfall of the financial system. Unfortunately, again, they've got so much debt they just can't pay it back. That's why we believe they cannot raise interest rates.
And, of course, as we mentioned, we're hearing word that if you have a safety deposit box, they don't want you to put hard cash in there, which is pretty amazing. Thank you very much, Harold Siegel.
My pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Speak personally and privately with Harold about investing in hard assets. RareColoredDiamonds.com, 1-800-432-1022, RareColoredDiamonds.com. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.